How are you now? James Whelan here, and you are listening to the Theory of Thing Investment Podcast. I've already introduced myself. Brought to you by. Hang on, I've got to do it. I should have probably had this bit set up a little bit earlier. Oh no,
hang on. Bit of wakey.
Yeah, a little bit of wakey to start the decky. There you go. I'm joined here by Heath Moss of HLM Investments. Heath, how are you now?
Very well, thanks, mate. Extremely chilly here in Adelaide this morning. Dropped the kids off at school.
Yeah.
It was bloody icy. But
yeah. These are the 2 weeks of winter that we get. Oh, I haven't got the lights on. Okay, Google, studio on. Look at that. See that? That's
there we go. Beautiful.
That's how that's working.
Bloody
I got a new shirt. Look at me in my new Polar shirt. Do I look good? I look amazing.
Is that Ralph? Ralph Gren?
Yeah, it's got the horse on it, mate. Don't worry about that.
Yeah, it's got the horse.
They don't miss $160.
Mate, I'm sticking with my my Gazman business shirt. So love the Gazman.
You're a Gazman through and through, which
beautiful.
Is great. Mate, we've got a big show planned today. In that I haven't done any planning at all for this show as usual. But Heath has always got his. Yeah, I saw your note drop yesterday, mate. I got into the start of it. It looks like the usual sort of thing. The word complacency appeared pretty high up there, and I think I have to agree with you too. Market is more than a little bit complacency. Anyway, but first off, what else is going on with you before we get into the market stuff?
Not much. The one of my middle child, he lost his first tooth yesterday, so that was a bit of. So yeah, it's been wobbly for like a week and a half, and he's been a bit worried and nervous about it hurting and that. But the old tooth fairy came last night. But outside of that,
now it's an inflationary question about. I just got to fix the lighting. But it's an inflationary question of how much is the tooth fairy giving now? When I was a kid, $2 was a lot of money. What do you got? What do you got going in there now?
His first tooth, and same with the other, my eldest, they got $7 for their first one, and I think it's $2 after every other tooth after that. So, we don't. Well, I think because like grandparents.
Did you say $7?
$7.
You give it a fiver. A fiver for
fiver and a
tooth fairy's giving a fiver for.
Yep. Because the grandparents they give them money as well. So just like.
That's real grandparent money, not tooth fairy money. Okay. Yeah, it's ours. She lost a molar this week, our youngest one, and it was about tooth fairy rocked up with about $4 that he happened to have jangling in his pocket coming home from the pub. Yeah.
Wow.
Yeah.
Bit stingy.
That's a nice
stingy there.
Mate, hey, the tooth they can't all be Yeah, I counted. You're doing it by weight, hey? So there's a question for the audience. Should it be weighing the tooth and then in some sort of what? And then what do you're probably FX hedging that as well at some stage or what?
Tooth weighted index.
TWI. Mate, all right, let's get into the market report and then we'll get some footy tips going on. What do you got?
Check the screens up.
I've got to do my job, don't I? The one thing I have to do.
Yeah, I know. Yeah.
All right, you talk, I'll listen. Go. Impress me.
Beautiful.
And it better involve burritos. Otherwise
burritos.
I'm out.
Yeah, we'll get to them. S&P 500 up on your screen right now. Half decent week. What are we up about 1% or so? Came off a little bit last night, but we had the triple witching event that happens once a quarter last night. So that provided a little bit. The market was up almost 1%, and then it swung down on the back of those options and futures contracts, etc., all coming due on the one day. So not much to really report there macro-wise. We had retail sales this week for the US. They were softer than expected. Bit of housing data last night in terms of mortgage applications and building permits. They were softer than expected. Jobless claims were higher than expected. So it's just continuing that theme of softer macro data and surprises to the downside now. Whereas in the first quarter of this year, it was the opposite. We're getting stronger data than expected and surprises to the upside. But like you said earlier in the show, it does seem like it's a complacent market. We've got a VIX down at multi-year lows. Earnings seem solid. There really aren't any major speed or headwinds on the horizon that the market can see. We've got elections coming up all over the world. But
there's
I mean, the main
more
election in the
elections.
US, main election in the US really shouldn't change much. There are no knowns. We know what Biden and Trump are going to deliver. So,
Yeah.
and we've got this tailwind still from AI and massive capex spending that is coming through in the US and will follow through to the rest of the world on the back of data centers and AI, and then obviously the green infrastructure and decarbonisation, etc. So that should help commodities, etc. So I mean, really, outside of a black swan event, which I mean, normally you get indicators for that sort of thing, like we did before the GFC. We saw housing defaults, etc., start to rise before things went
there's little
sour.
shoots. Yep.
Yeah, but there's nothing really in there. I mean, I'm getting sick of getting all these emails about private debt funds, etc., wanting me to bloody put money into them. I mean, maybe something could be around there, as they seem to be getting a bit bloated, private debt. But outside of that, it. I mean, I'm not saying we're not going to have these corrections along the way, which I think we will, and volatility will pick up, and it's extremely cheap to hedge your portfolio at the moment. So that generally tells you we're a bit exhausted. But 10 outside of 10 to 20% corrections over the next, say, 18 months or so, I'm not seeing much out there that's really of concern. So I think complacent is the right word. So what else we got? We'll look at the XJO.
Hold on a second, mate. Just take a step back. Go punch that one back up there. I mean, the S&P 500, it does look overbought. It does look like it's
on the RSI down there.
I'm not plowing new allocations into the market at these levels. I'm just, I just want to see it sort of either sideways a bit or don't. I will go on about this. Can you pull up the CAC? Because while we're talking about just international indexes as well, and we mentioned elections, I'm putting my old macro fund manager hat back on from my days. Obviously, not. I don't have to do that now that I am running a wealth management business here. But I think that's a buy. The French market, generally speaking, if you just want an area of this one, it's a buy, because I think that Macron has played a strategic game. And this came from Louis Vicent Gave from Gavcal. Sorry, Gavcal, which is a research house. I've done radio with him a few times. Really smart guy, and just runs rings around me. I never challenge him on anything, but he's extraordinarily smart. He talked about the French election. So we saw what happened with the European elections come up. The National Front swept France. Now France, I don't understand why. It's just my old colleague, when I was working with them, it just got me really big on French elections. I love a French election. Also studying, I was one of the foremost experts on French revolutionary history when I was in school. Did it for 3 unit. There's a bit of information about me that you didn't know. And I just always followed what's going on. So the National Front swept every department, almost every department except for Paris in the European elections for the European Union Parliament, the European Parliament, I should say. So Macron almost immediately called for a French election, a snapped election, which a lot of people saw as being a challenge to the people. Just go, okay, if you really believe in that, then go out and vote with them yourself, and you can have a far right government. That this is actually incorrect, according to Louis Vincent. I got to stop saying according to Louis Vincent. So what he's doing is, because you don't get refunded for your election campaign for another couple of months, in effect, the coffers have been bled dry by all of the small parties, the Greens and the National Front. They're not going to be able to refund those coffers, and you can't get debt. Sorry, you can't get a loan from the bank if you are one of those parties. You've got to be a moderate party. So his one that he's the letterhead of will be able to get bank financing to be able to run their campaign. I think that he's playing a very smart game, and I think that technically, unless there's some amazing groundswell of which there could be, and if the vote's on and it actually swings to the National Front, that'll be fascinating. And then there's going to be protests in the streets. Everything will shut down during the Olympics. So effectively, if that happens, the Olympics, you may as well not go there, because there'll be so many protests in the street. That'll be the end of it.
Yep.
However, he's doing it because they don't have any money to be able to run any campaigns. If you think that is going to work, I would be buying this index, and it shoots back up to where it should go. However, the cost to protect from default, from the French government defaulting, hedging. It did increase that rally. So, and I thought it was quite significant how much it rallied to those those default costs. What are those, CDS? I can't remember what they're called.
Yeah,
Anyway,
credit default swaps. Yep.
yeah, so
CDS
they did rally. So the cost of insurance, as we know, the higher insurance is, the more theoretically likely something is to happen. So that's gone up.
Yeah.
That's your little signal about potentially that France is in a little bit of trouble. I'm happy to take them on. I think that Macron will. It's a smart strategy. I think that they should go okay. I mean, they're saying that the National Front won't even have enough money to be able to stand candidates in every seat. So that's how much you need. You need like €5,000 to put them in. So that's anyway. That's my little take on that one, and that's saying so much for not being prepared. I just had a little thesis on why I think the French market's a buy.
Fair enough. Fair enough.
Okay.
I don't know if there are any ETFs that are the pure play France.
Not local listed, no.
French, not locally. You got a euro. Yeah, you got a euro one, but yeah, I dare say the CAC is a very small percentage of that. But anyway, so no, good theory there, good thesis there. Good.
Yeah, there's a couple of half decent French banks in that too. We go on.
Yeah. I'll quickly move to the XJO. Basically gone nowhere this week. Started down and sort of rebounded a bit. We're looking there. We're making higher lows, which is encouraging. And if we're able to get past that 7,900 mark, which is about 110, 120 points away, that's our last all-time high. Then we can see an explosive move to the upside on the XJO. And I think that's logical. I mean, if we continue to see this push with AI and that extra capex spend, etc., that's all positive for commodities. And if China gets their house in order, and actually saying that, because this capex spend, and we're going to need so much infrastructure with this green and AI, etc. stuff, we don't need the Chinese property sector to be strong. It's all that money that is sloshing around in the US and Europe and even here in Australia, and that's going to put enough pressure on the upside for these commodities to push them higher. So I think the property story over in China now is overdone on that in terms of commodity side of things. I think we saw commodities come off the other week on the back of a higher US dollar and some other stuff happening in China, but that will drive. I think
China's issuing bonds. Sorry, China's issuing bonds to be able to provide stimulus. I don't know if you have any more detail on that you wanted to go into it. That's the headline.
Yeah, look, it's just more of this sort of trickling of support for their property sector. You've got these bonds aimed at their property sector, which they started doing this last year, mid last year, and I think they got a little bit of a response to start the year from that. But it takes a good 12 months apparently for that stuff to sort of really trickle through and have an effect. But we're seeing local governments over there relax home ownership laws in terms of how many homes you're allowed to own, because basically you're only allowed to own one home over there. And what a lot of Chinese do is you get married, you have to buy an apartment or a house when you get married over in China. That's part of the deal. So if you want to buy a second home, then basically they get divorced. They go down and get a fake divorce, and they go buy a second home. Those sort of rules are being relaxed now, where you won't have to do that. You're allowed to go buy a second home. And some of these are like in Shenzhen, they're tech capital and stuff like that. They're starting to see these sorts of things relax. So it'll take a while, but I think, and the Chinese government's scooping up all those excess inventories and using them as social housing and affordable housing. It will take a while, but they will find it. I think they've found a bottom, and it will slowly creep back up. But we won't get a big boom in property like we have in the past with the Chinese. But we don't need it, like I said.
Okay.
So I think that's where the XJO gets the next league from is commodity prices again and energy prices again moving higher. So it's looking good there. And also, actually, our earnings seem to have troughed. It's what do you call it? I've forgotten the name of the season we're in end of June, but where companies usually come out and tell all and say confession season. That's it, confession season, where they tell all and sort of release their bad news before earnings out in August. We really haven't had anything, and we've only got a week to go. So I can't think of a major company with anything too major negative coming out. We had Treasury Wine Estate yesterday come out with some news, but it was inconsequential. So yeah, but we move on to the yields. They continue to drift lower on the back of softer macro data and the expectations of cuts in the US in September. I think they're 70% factored in, so they continue to drift lower. Like I said, the US dollar's been stronger, but that's more been a European story, more because
European
the
weakness
euro,
story for the reasons that I just said.
yeah, you got the front, but the euro has fallen quite significantly, and the euro makes up about 50% of the weighting of the Dixie,
60.
and that's on the back of rate cut expectations there starting to ramp up as well. So,
We saw
whereas
Norway.
the US,
What is it? Norway and Switzerland overnight.
both cut.
Norway did cut, didn't it? Yeah,
But,
and their markets actually rallied very slightly on it, so about 0.4%. So showing that the
Switzerland
market
did
is
too.
happy to participate.
Yeah, Switzerland did too, but they only meet 4 times a year, so they have to sort of cut.
Switzerland leads the way.
Whereas,
Is leading the way on the rate cutting cycle. They move. Everyone else is going to be shifting as well.
Yep.
So
and
let's rock and roll.
the Swiss franc makes up, I think, about 10% of the weighting in this as well. So,
I did not know that. Okay, cool.
Yeah, it's that, and the Japanese yen make up 10%, euros 50%. Yeah, there's a few other smattering in there. And we had the Bank of England come out and hold as expected, but August they're expected to start cutting themselves. And we know the Bank of Canada cut last week, so the cutting cycle is well and truly on its way. US expected in September. Australia's cuts are expected in. Well, actually, now I think they've been pushed out to 2025, given the RBA's stance this week and more hawkish tone, which I think is a bit weird considering where macro data is going here. Outside of jobs data, which I think actually we saw this in the US too. We saw jobs coming extremely hot a week or so ago, and that sort of spooked the market. And we've seen jobs last week here come in a little bit hotter as well. But if you drill down to it, here in Australia, without government-aligned sectors, jobs growth is flat. It's at 0.3% year on year. So without your health, without your education, etc., there is no jobs growth in Australia, which I think is pretty alarming. And it's similar in the US.
That's under talked about, underspoken.
Same with the US. So I think, and that's why I think Powell spoke about it at the end of last year, that they're happy to look through the jobs data because of the huge government support for it, and the fact it's coming from like the health and education sectors, and the fact that 6 months down the track when payroll revisions come through, they're all getting revised down, majorly revised down. So it's a weird situation. So look at copper. Copper came off a bit, has maybe found a floor, hopefully.
I'm happy. I'm happy with it here. I'm happy with it here.
Yep, copper looking
and
good.
I'd add to it there.
Came off with those commodities the other week on the back of the strong US dollar. Gold, we saw gold smacked. You can see that big candle there. That was $100 an ounce. That was about a week ago, and that was on the back of China when the Chinese central bank came out and sort of detailed their asset holdings. It noted that they had not bought any more gold. It was the first month in 18 months that they had not bought any more gold. So
very strange thing.
Gold got smacked.
It stopped. Yep.
But you can see there it's recovered. It's recovered nicely.
All right. Do you want to do your pick? Your pick and my pick. I've got to say that the timing of your silver thesis was. I've really seen worse. I mean, but it's still, she's back, baby. But
Look at that.
I mean, that was a 3-4 days outside bearish engulfing candle the day after that report came out. You can't win them all, but look, you're back in action there now, pretty much where that was. I mean, that's a solid day.
I made that call on silver right here on this candle here, around the $31 mark, and we had silver that night, that day actually. I think we released the pod. That day, that's when China came out and said that we hadn't bought any more gold, and of course, silver has a high correlation to gold, and it got smacked like 7-8% overnight. You can see that big red candle there, but it's holding the trend, and it's come back. It's got claimed back most of those losses. It's back up to almost $31 an ounce. So it did get down to 29. So silver's looking a lot better there, and as long as it holds that trend, I'm a happy little camper.
Yep.
Um,
Now, what about Jimmy's big short in natural gas?
oh, natural gas. We're going to find natural. It's doing a little. You're not hurting as much. You've come off the ledge.
Oh, mate,
So
I got margin calls for sure. That's
you
my
got it.
theoretical paper trade. I've been phoned up and cleaned out. Don't worry about that, mate.
So
There's
it
no coming back from that.
got to 311 a BTU.
Yeah,
Or is it BTU? I don't know what they measure in these days. But
pretty
it got to
strong unit.
311.
Yeah,
Yeah, and or maybe a little bit higher, but it's back down to 2.7. There are excess inventories in the US and Europe, but I
yeah,
mean, like I have written in my note this week, I think those excess inventories are going to be chewed through pretty quickly, and so do FactSet, and actually I think Goldman's as well believe that the excess inventories will be gone by the end of winter next year. So
yeah,
first quarter next year. And that's
yeah.
on the back of, again, this AI and data center push where by 2030, data center power demand is going to rise by 160%. And obviously, the US utility market had been forecasting for 0 to negative growth to 2030 in terms of power demand. And that's changed to about 2.5% year on year up until 2030 now. So it's a big shift, a massive shift in terms of power demand. And I think gas is going to be that commodity that fills that gap, because obviously we've spoken about nuclear before, but there's long lead times to add extra capacity in nuclear. It'll still have a
Yeah.
role, but it's a long lead time. They've got lots of gas, the US and the globe, but I think those excess inventories, which a lot of this demand from AI and data centers is not factored into that, I think is going to push gas prices much higher. So I'm starting to buy a lot of not a lot, but starting to buy some Woodside,
Got
even
some
though
woodies
they
in.
they don't
Yeah,
have
that's the
even
best
though they
one.
don't have direct exposure to the US gas market. It's going to be that knock-on effect. The US will run it through its inventories or excess inventories. It needs, at the moment, the US is exporting about 12 BCF a day. They're saying by 2030 they're going to need an extra 3.3 BCF a day from for AI sensors for gas. So that's going to have to come from somewhere. New supply is not coming online until late in the decade. So exports, a lot of gas production at the moment is landlocked via pipes, etc. So it's not easy to move around in the US. So a lot of that's going to come from their LNG exports, which mean Europe doesn't get as much, which they're going to have to source it from somewhere else, and there's knock on effects. So I'm liking Woodside down here at what are we, around the $27 mark? I think they're what do you call it? There we go. Yeah, it's not a pretty chart, but I'm starting to dip my toe in the water there, and hopefully it finds a floor around here and starts moving back up, because the energy prices are responding. You can see the oil there got down to about 72
Yeah,
there, 73,
yeah.
has bounced back up to 81. That's WTI. And I mean, it is driving season in the US, so that's got to be taken into
I
account.
just love this driving season, which is just
But
the
yeah,
same thing happens every year. It's just people
yeah,
just get in their car and they just drive around.
exactly.
All right, mate,
So
we're running low on time. What else? And then we'll do some free tips.
quickly cover GYG, Guzman, and
I thought
Gomez,
we
the
were going to get
burritos
through without the
boys.
burritos.
Actually, there's no point in chucking the chart up because
Look
there's
at
only
that
2 days.
candle. It's
But
2 days
yeah,
of candles. Look at
it
that.
was a
Yeah,
it
you have
was
a
a
bit of technical analysis on that.
$22. Sorry.
You got some. You want to put some technical analysis on that? I'm not seeing any
Oh
RSI or
yeah.
MACD on that chart, mate. Go on.
It's
Anyway, so look, it IPO'd at 22, got to 30
22.
something,
Yep. It was
and then now it's back down.
much higher than anyone expected, I think. I was saying about 23.50. The scale back was quite large on the IPO. I think people only got 45% of their allocation from the IPO.
Yeah.
Only 16% of the company has been floated. The rest is still in private hands.
Mate,
But yeah, who would have
Barrenjoey has
thought?
made an absolute ticket out of this thing. It's an
Yeah,
extraordinary thing. Amazingly, a couple of my burrito stories. I actually ordered one. My youngest, she did really well at a dance comp, and you do well. Always celebrate victories, and that was a victory. So she said, I just want to get some Guzman and Gomez, Dad. And so, you know what? I'm going to try these burritos. I haven't had them for ages. Figured it's
yep.
IPOing this week. I'm going to get a burrito in my hand. Ordered it, hit all the buttons, one of the jalapenos, one of the things, get all the extras, guacamole in there too. $20.
$20.
It arrived. $20 burrito, and she got some quesadillas and a Sprite. I think the whole thing was about $40 for the delivery, so $50 to get it into my house.
Yep.
I tell you what, the burrito goes very well with a glass of Sauvignon Blanc, and it was actually quite good. However, not only with the jalapenos not there, they'd stuffed it up. They also left an entire slice of lime in my burrito. You bite into a lime,
no.
you freaking know about it. I couldn't believe it. And I just thought, well, this thing's. I'll short the company on the first day after that, and theoretically that's not gone too badly.
Yeah, it's down a bit today.
I can't believe they did that.
Yeah,
Crow's Nest, Brisbane, and Gomez, mate. A lime slice in my burrito. Are we going to get sued? Probably.
Down 4% today. I don't understand the valuations and the hype around it. I mean, they do have some okay food, but you're really fighting in terms of market share. I think they have about 4 or 5% market share here in Australia, similar to KFC. But the valuation is huge, and you're fighting against the behemoth in McDonald's. And I'm not betting against McDonald's. Given you go into their app and you look at the deals they have and the specials they have, and the cost of ordering. Like I know we do McDonald's once every fortnight or something here, and it costs for us the family of four, $32 via the app to get McDonald's. If we were going to do that via Goodman and Gomez or KFC, it's going to cost us $50 to $60.
You might get a slice of fruit, fully skinned, just sitting in the middle of it too. Anyway,
so I'm not a buyer here. I'm staying well clear of Guzman.
Good enough. All right, footy tips, mate. What have you got for us this week?
Mate, I've only got the one. I think tomorrow, Arvo, Brisbane beat Port Adelaide here at Adelaide Oval. I think Brisbane are back. They're in form. Port looking sluggish. And
can't stand Port, mate. Port, they absolute custard against the Giants, mate. They couldn't kick it straight. I was happy to see it. You know how much I dislike that football team, and some of the people connected to it.
So that's paying $1.92. So I'll take that.
$1.92, not bad. All right, I got some deep value here on my one too. Take your $1.92 and you multi that in. I reckon the Titans at home. I'm following Andrew Johns on this one. He's picked this one too. Titans at home against the Wars. So it's okay because I actually don't mind the Wars as my second team. So if they win, I'm going to be pretty happy. If they lose, I'm also going to be pretty happy because I'm betting on the Titans at $2.55. So multi all that together and you get yourself a nice little milkshake. And then, those you might be able to go and buy yourself a burrito with a piece of fruit in it.
You might be able to afford one.
If you're lucky. Okay, mate. That's all for the show, guys. Thanks very much for joining us. We'll catch up with more amazing, successful stories next week. Let us know in the feedback section about whether you should be weighing teeth or the Tooth Fairy should be weighing teeth to figure out how much they should be paying in this economy. And we'll discuss it next week as we go on. Good luck to all players out there, and I hope that your sports team do well, unless it's Port Adelaide. Heath, mate, HLM Investments. My name is James Whelan, Managing Director of Barclay Pierce Capital's Wealth Management Team. I've been joined by Heath Moss of HLM Investments from Adelaide. Thanks very much.
Thanks, everyone. Have a great weekend.